Hi, I'm Professor Bei Dong from USF School of Accountancy. Today, we're going to cover many topics related with balance sheet and statement cash flows. In this video, we're going to talk about the purpose of the statement of cash flows. In terms of the basic information in a typical statement cash flows, it presents a detailed summary of all the cash inflows and outflows, or the sources and uses of cash during a particular period for a particular company. And it is designed to help us address the following three questions. Number one, where did the company get cash? Did the company get cash from selling their inventory and or at the same time selling piece of the land, equipment, a building, and or at the same time by issuing stocks and bonds? Where did you get cash? Number two, what was the cash used for? Did you use the cash to pay employees? Did you use cash to pay your vendors? Did you use cash at the same time pay for interest, dividends, pay off debt? Where did you use cash? Number three, what was the change in the cash balance? I look at your balance sheet of last year, there's a cash balance of $5,000, let's say. And this year, cash balance is $10,000. There's a net increase of $5,000. How come there's a $5,000 net increase in cash flows? Okay, explain to me. So this statement is going to provide answer for that also. Now, why do we need these financial statements? Number one reason, it will show you how the business cash increase or decrease for the period very directly. Number two, it will demonstrate the relationship between the accrued net income and cash flows. We know that your net income is something that you earned, and the net income is recognized based on the revenue recognition and the matching principle. It is something that you earned, however, it is not necessarily something that is realized in cash. Think about accounts receivable. Accounts receivable is part of your sales revenue that you earn. However, accounts receivable is part of your sales revenue that is not realized in cash yet. That part is included in net income. For the expenses, think about depreciation expenses. Depreciation expenses is the expense that occurs, however, it is not the cash outflows. So there's a difference between net income and cash flows because cash flow is something that is really realized right now. There's a difference. And this statement cash flow is going to show you how come there's a difference between these two numbers. So that is the second purpose. The third purpose, this financial statement is going to help you evaluate the liquidity of a company. Put it in a very simple way. We're going to ask the company, okay, whether you have cash to pay suppliers, to pay employees, and other expenses. Second of all, whether you have cash to pay off interest and debt due. Thirdly, whether you have cash to invest in great projects for the future growth. All these questions, okay, we're asking about cash because they need cash to pay for them. And your income statements, balance sheet, statement shareholders' equity cannot provide you direct answer for that, but statement cash flows can give you a good answer.